All right, Zillow just dropped its brand new forecast for the U.S. housing market, and let me tell you, it is fascinating. It basically reveals a country that's splitting in two. So you can forget about a single national trend, because what we're really looking at are two completely different stories playing out at the same time. Let's get into it.
So this is the big question on everyone's mind, right? Housing 2026. Are we looking at a boom or a bust? Well, according to Zillow's latest data, the answer is it totally depends on where you live.
Okay, to really understand what's happening, we have to start at the national level. And the story Zillow is telling here is one of, well, cautious stability. And I'd emphasize the word cautious.
So here's the headline number that everyone sees. Nationally, Zillow is predicting that home prices will go up, but only by 1.2% in 2026. So definitely not a boom, but it's not a bust either. It's more like a slow, gentle drift upward. But that tiny number, it really doesn't tell you the whole story. And here's a big reason why everything is so sluggish. Mortgage rates. They are expected to stay stubbornly high, just refusing to dip below that 6% mark. And that high cost of borrowing, it's putting a major brake on the market for, well, pretty much everyone, buyers and sellers alike.
But there is a little bright spot in all this. Zillow is forecasting a 4.3% rise in the sales of existing homes. Now that points to a market with more activity, more churn, even if the prices themselves are staying pretty flat.
So, on the surface, the U.S. market kind of looks like it's just treading water. No crash, no big surge, but that national average is masking what's really going on, which is a dramatic split happening from one region to the next.
And this right here, this is the core of Zillow's entire forecast. We're not really looking at one single housing market anymore. We're looking at two, and they are moving in completely opposite directions. You could call it the Great American Housing Divide.
So here's the divide in a nutshell. On one side, you've got the Midwest and the Northeast. The forecast there, continued strength, mostly because of their relative affordability. And on the other side, you've got the Sun Belt, all those states that saw those massive, crazy price explosions during the pandemic. That's where Zillow expects to see some pretty concentrated price drops.
And hey, this isn't just my interpretation. Zillow's report puts it right there in black and white. They expect, and I quote, an ongoing trend of strength in much of the Midwest and Northeast to continue, with price drops primarily concentrated throughout the Sun Belt. It's one country, but two totally different housing markets.
So let's zoom in on that second story for a minute. The markets where prices are actually expected to fall. It turns out the affordability crunch is hitting the absolute hardest in the very same places that grew the fastest.
And to put a number on this, Zillow forecasts that home values are going to fall in 214 different markets across the country. That's almost 1 out of every 4 markets they track. So, yeah, that's a pretty significant chunk of the U.S.
And this isn't just a forecast about the future. It's really a continuation of a trend that's already happening. I mean, just look at the price drops some of these big Sunbelt cities have already seen. Austin and Tampa are both down 6.1% year over year. Miami isn't too far behind. These are real, tangible drops in markets that were once red hot and are now, well, they're correcting.
Okay, but it's really not all doom and gloom. The forecast also points to some serious signs of resilience and stabilization. This is a story of a market that's correcting itself, not collapsing. There's a big difference.
So consider this. In 2025, 24 of the nation's 50 largest metro areas saw home prices go down. That's almost half of the biggest cities in the entire country. But now, look at the forecast for 2026. That number is expected to get cut exactly in half, down to just 12 major markets. To me, that is a powerful signal that the worst of these declines might be behind us as the market starts to find a new equilibrium. So what's the big picture here? Well, we're seeing fewer big cities with falling prices, we're seeing more homes actually being sold, and we've got that continued steady strength in the Northeast and Midwest. See, this isn't really a story of good versus bad. It's a story of a market that's finding its balance again. And all of this brings us to what I think is the most important takeaway from this whole forecast. If you really want to know what's going on in housing, you absolutely cannot just look at the national average. It's not enough.
There's actually a name for this phenomenon we're seeing. It's called regional divergence. It sounds a bit academic, but all it really means is that economic trends, like housing prices, are literally moving in opposite directions in different parts of the same country. It's how one single tiny number, like that 1.2% increase, can hide two completely different realities.
So I'll just leave you with this question. That national data is just one piece of a giant puzzle. What's the real story happening in your neighborhood? Because in a market that's this divided, that's the only story that truly matters.